Hello, everyone, and welcome to this week's episode of the Classroom KE. Let me ask you this question. Have you ever wondered or asked yourself, what would happen or how would things be if banks never existed? How would salaries be paid, money be exchanged between individuals, businesses, organizations, the government? You know, how or where would business people be able to get loans from? How would the government be able to collect taxes to be able to fund, development and also run different programs that it runs? Now, this week, I want us to introduce ourselves to the foundations of banking. We ask ourselves, what is banking? What are the objectives of banking? Or, why do banks exist? Then we are also going to ask ourselves uh, the different functions of banks, uh, the primary ones and the secondary ones. So, by the end of this presentation, you should be able to define banking. You should be able to describe and explain the different objectives and also the different functions that the banks do play. Now, what is banking? Banking is the business of accepting deposits from customers uh, or funds, safeguarding those deposits or funds, then lending them to borrowers or those who need those funds, facilitating payments, be it among individuals, government, businesses, individuals, and also providing other diverse financial services that do support economic activities. Simply, that's what banking is. Now, banks do exist, or they have different objectives that they achieve, and we are going to look at them briefly. Number one is that banks do safeguard customers' money. Um, you know, Banks do have advanced security systems, they do have insurance, and they do have regulatory safeguards that make sure that the customer funds are safe, they are secure, and they are accessible. The customers are guaranteed that their money is safe when it is in the bank. You can imagine maybe the cash that you have generated from your business, instead of storing it or taking it or keeping it in a bank, when it remains in the shop, it's exposed, it can be stolen, it is not secure. uh, you can imagine also maybe keeping money at home in large amounts under the mattress. It is exposed because there's a risk of fire, theft, floods, and all those things. So it is good that banks do exist and they assist to safeguard the customer's money. Number two, it is to facilitate payments. Uh, you know, they do offer quite a number of options from you know checks, be it standing orders, be it mobile money, internet banking, real-time gross settlement, the ones we call RTGS, EFTs, the electronic funds transfers. We have said checks, all those methods of payment, exchange of funds between individuals, the government, businesses, organizations, all those. The banks do play that role, or they achieve that objective to make sure that they facilitate payments. Number three is that banks do mobilize savings. They mobilize savings. They have quite a number of savings options, from savings accounts, fixed accounts, call deposit accounts, and most of those accounts, the funds earn an interest when it's deposited there. This is to encourage customers to save, and those are the savings that are now used to lend to you know the borrowers who need the money, maybe for business and all that, and now it earns an interest. So that is another role that, or another objective, or a reason why the banks do exist. Now, banks also provide credit. They do provide credit, in terms of loans and other forms of credit. We need loans to start and expand our businesses. We need loans to buy houses, to buy cars, pay school fees, all those. Uh, Banks do provide credit for us so that we can be able to achieve our financial objectives. So what is mobilized as savings? A portion of it is lent to people, and then they're able to meet their financial objectives, and then they are able to also return those funds that was credited to them at an interest, and then a portion remains so that the bank now will be able to you know uh, enable the customers meet their withdrawal objectives again, because if they would lend all the funds, and then the customers, they need cash also to withdraw and also achieve their own financial objectives, it won't go well. So that is how they try to balance cash flow in the economy. The other objective is that banks promote investment. They have different options, like the fixed deposits that we have said, treasury bills and bonds. All these are, options that are used to grow money, so that there's a value addition, there is money, your money is growing, and then investment, is maximized for the funds that you have. The other one is that banks do promote economic growth. Uh, we have seen banks financing sectors like manufacturing, agriculture, education, all those. They promote or they support economic growth, because when all these are supported, jobs will be created, and so much will be achieved in terms of economic growth. The other one is that banks also exist to earn profits. They exist to earn profits. From lending the money to those who or deserve or earn that need that money, maybe to expand their businesses, buy homes, buy houses, buy cars, and all those and other financial objectives. They earn an interest from the loans that they do provide. On the other hand, also, they have fees and commissions, foreign exchange, advisory services. All those ensure that banks are able to make profits, and they are able to reward the shareholders or the members when it comes to circles. Also, they are able to, expand their reachability in terms of branches, invest in technology that will maximize customer service, and at the same time, they are able to make sure that they improve customer service, to make sure that customers are served efficiently. So those are some of the objectives that the banks do achieve. But I've forgotten one: encouraging financial inclusion. We have seen banks go an extra mile to reach customers even in the rural and undeserved areas through bank agents. I know within your neighborhood there is a bank agent. They're trying to make sure that they empower more people to participate in the local or in the formal economy. Also, programs like financial literacy programs, so that they empower people, they expose people, so that they are able to participate in the formal economy, as we have said. Also, mobile banking, internet banking, and all those methods of digital banking, those digital banking services, they make sure that everybody, even people in the rural and undeserved areas, they are able to participate and join the formal economy. That's encouraging financial inclusion. Now, let's talk about the functions of banks. Functions of banks are divided or categorized into two. There are the primary functions and the secondary functions. To start with is the primary functions. What are the primary functions? Primary functions are those functions that define the core existence of the banks. These are the functions that they are defining the core existence. The core existence, primarily, why do banks exist? Number one, as we said, accepting deposits from customers and safeguarding them, of course. It's a safe place where you can be able to keep your funds. Number two, it is granting loans and advances. And number three, creating credit. Granting loans and services. You know, loans, business loans, school fees loans, be it asset financing, and other forms of credit, salary advances. It's a primary function that is carried out by the banks. As we have said, a portion of the funds that are collected are lent to people, and then the other portion remains so that the customers will be able to meet their withdrawal objectives. Then number three, we have mobilization of credit. It is to make sure that money is there to be lent to clients. As we said, if 10,000 customers do have or deposit 10,000 Kenya shillings, each one of them, that is 100 million, and that will be able to support the creation of credit and granting of loans and advances. Number two is the secondary functions. These are the support or value-added services that are supposed to ensure that they are complementing the primary functions or they are maximizing customer convenience. Number one, agency services. Agency services, there are so many instances when the bank acts on behalf of customers. Number one, collecting of checks, collecting of rent, all those functions, payment of, salaries, all those are the agency services. So the bank is acting on behalf of the customers. Number two, utility services. Utility services are the services, that the financial services that enable us to pay for services that are essential, the essential services, the daily, essential services, electricity bills, water bills, gas payment, such services, and also access of other private and public services like payment of school fees, payment of loans, all those services, are some of the utility services that are provided by the banks. Also, issues to do with foreign exchange. You have received money from abroad and you need to withdraw it, you need to send money abroad. Some payments you're supposed to make them are not in Kenyan currency, or you need also to maximize foreign currency exchange and earn from the difference between this currency to the other one. All those services are provided by the bank. They are secondary services under the utility services. Trade finance, letters of credit, all those are services that fall under this category. Number three are the advisory services. Banks act as advisors, especially on matters finance, financial planning, wealth management, all those services, and they're able to, get something from this service. So banks are there; they do play the primary functions and the secondary functions. I'm sure by now you have been able to understand what banking is, the objectives that they achieve, and then the functions, the primary and the secondary functions. So I want to give you an assignment. You choose a commercial bank, maybe where you bank, or a bank that is near you. Ask yourselves, what are the products and services that they have there? Then what is the importance of those banks, maybe to different categories of people? Then also ask yourself, uh, what are the functions that you can see they are playing? Uh, um, and then are these objectives that we have also discussed here, do you see them being achieved from where you bank or that bank that is near you? So next time we are going to look at the importance of these banks to different categories and groups of people, be it individuals, businesses, organizations, the government, society, the local community, the economy. That's what we are going to look at in our next episode. Once again, thank you so much for watching. Kindly like, subscribe, and share so that we can be able to move together and be empowered in terms of understanding banking more. Thank you so much. See you in the next episode.